afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Meghan. With me, as always, to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Happy Friday.
Happy Friday to a very slow week in terms of market reports and what we normally would chat about.
It is a slow week for us, that's for sure.
We're going to talk a little bit. We're going to spend some time talking about demand, some supply chain concerns and issues and conversations. But to kick things off, let's recap what happened this week in the markets.
Yeah, so this week on the cattle side, the stronger cattle prices, cash-fed cattle were $3.20 higher this week. Those feeder cattle markets were anywhere from steady to $3 higher this week. On the future side, the August live cattle futures contract closed up nearly 50 cents. And the August feeder cattle contract was actually down 95 cents this week. On the beef side, the choice box beef price lost $2.75. That now puts it about $61 below where it was a year ago at this time. On the hog side, cash barrels and gilts were $1.70 higher this week. Futures markets were also higher. The August lean hog futures contract closed up nearly $3.90. Pork cutout value also higher, up $2.20 on the week. That puts it $13 below year-ago levels. We saw strength in butts this week, helping that pork cutout value.
When we take a look at some of these numbers specifically, we are what I would call probably in prime grilling season, although with temperatures pushing triple digits around much of the country, I'm not sure how many people want to be standing over a grill. How does that help us this time of year as we maybe preview a little bit of our demand conversation?
Yeah, so certainly seasonally, we're in a situation where we normally talk about, strength. You're correct. Some of the 100-degree heat that we see in some parts of the country, I think, is probably taking a little bit of the shine off the grilling season in those areas of the country. But by and large, seasonally, we tend to move higher, and I think that's helpful from a meat perspective, especially beef and pork.
Weekly slaughter numbers as we take a look at this week. Let's run down how things were shaping up.
Yeah, so according to USDA for the week ending June 18th, a run of 667,000 head of cattle. That's 7,000 below where we were a week ago, 3,000 head above where we were a year ago at this time. On the hog side, another run this week of 2.372 million head. So unchanged from last week, and that's about 72,000 head below where we were a year ago at this time.
When we look at how we're running year-to-year comparisons, what's been the change so far this year?
Yeah, so we've seen a 1% increase in terms of cattle slaughter relative to last year when we look at year-to-date, whereas on the pork side, we're actually 4.4% below year-ago levels in terms of hog slaughter.
We get into a pretty wide discussion about demand. And then for those who might be watching live, if you have questions for Scott, you can pop those into the comment section as well, and we'll get to those if we can. There are a lot of headwinds if we're looking at things that could impact demand. There's inflation concerns. We keep talking about the R word in terms of recession, rising fuel costs, interest rate hikes as well. How does that play into the big picture when we're talking about demand for U.S. beef and pork, but not just here domestically, on the global market as well?
Yeah, so I think if we start on the domestic side of the equation, first thing I like to remind us is that although we've had food inflation, we've had higher fuel prices, we've had this discussion about the economy slowing. You and I talked last week on the demand side about consumer sentiment and how poor it looked relative to the previous month. Yet we really haven't seen any impacts in terms of beef and pork demand to this point. I remind us that doesn't mean it won't change. I think we still run the risk of some pretty tough times ahead if the economy continues to not gain as much as we anticipate it will going forward, if we drop into a recession, if fuel prices continue to march higher. So I don't want us to get used to, well, consumers just aren't changing habits, even though we had much higher prices. To me, that could change relatively quickly. So there is that downside risk that I think we need to be thinking about as we think about pricing cattle and hogs going forward.
When we talk about the rising fuel costs, we talk about it a lot in terms of taking away disposable income, right? So we have one pot and we're pulling sections of it. Does it also potentially impact what producers do when it comes to marketing cattle and hogs as well? Because they're looking at higher shipping costs, or companies are looking at higher transportation costs. Do we potentially see some trickle or carryover impact there?
So I think the very short answer is yes. I think we do see effects. And for me, this is more the discussion now of, I think this administration's been working hard about trying to push inflation lower. Yet when you think about this from a beef and pork perspective, we're talking about all these inputs that are going to continue to likely go higher. So it's going to cost more to get from farm to processing, from that packer to the retail store shelf. Those costs just continue to move higher. I think that makes it very difficult to push consumer beef and pork prices down considerably from where they're at today. Now, maybe we're going to stop the growth in those, but hard to push lower.
Let's talk export demand. There's been some good news this week, especially as we think about moving products and chilled products through West Coast ports, or through ports in general, with the signing of the Ocean Shipping Reform Act. How does that play into this big picture of export demand and our ability to provide product to our customers around the globe?
So I think that's been a good help. I think if you ask a lot of the processors that are heavily involved in export markets, they will say bottlenecks at ports have continued to be a big issue for them, even though it may not be getting the same headlines it did a few months ago. And so being able to open up those ports to allow more beef and pork to be shipped outside the United States certainly should be helpful to us. And when you realize 25% or so of what we're producing in this country is destined to be consumed outside the United States, it makes it important to keep those ports as open as possible.
We're going to talk West Coast for a second, as we kind of an interesting story that popped up. We found out Smithfield is closing their only California processing plant. How does that impact supply chain, supplies, and what does that mean for the pork sector as we look ahead and this plant heads to come offline?
Yeah, so it's been an interesting week with that announcement. Business conditions were often being reported as the reasons for that plant shutdown. That is one of the oldest plants we have today. As I recall, some of the most recent data would have suggested runs of 7,500 head of hogs a day in that plant. One has to naturally, I think, look at is Prop 12 in California having some role in terms of the decision Smithfield's made there. I think only time will tell whether that's the case, but we're going to need capacity going forward at some point. And you hate to see a plant that's actually shuttering. It'll be very difficult to ever get that plant back up and operational again once it's shut.
If we need space and we need slaughter capacity, and we know that that's part of it, does this maybe increase some concern about potential bottlenecks in the long run and in the future?
So I think so. Sometimes I'll actually say now, Megan, the growth in production of beef and pork is going to be driven more by available processing capacity than it is by decisions made by producers of cattle and hogs. Because if I don't have a slot to be able to process those cattle or hogs, I'm going to be in trouble and likely not interested in investing in production facilities. I'll say it's more than physical space as well, right? We could go down the labor road here yet again and remind ourselves that not only do we maybe need physical plant space at some point, but we're also going to need more labor to make sure those plants are operational.
It's going to be an interesting conversation as we look ahead to the remainder of 2022, but on into 2023 and beyond as well.
Yeah, that's correct. I keep looking, going, the volatility isn't ending. As much as I would like it to end, Megan, I'd like to get back to the good old days where once we kind of knew how much supply was going to change for these different products, one could have a pretty good idea of what was going to happen to prices. And now it seems like all that's thrown out the window and we have everything moving at once. I will keep saying, however, volatility offers opportunities. Opportunities to make money and opportunities to lose money. No volatility doesn't give many opportunities one way or the other.
And it wouldn't give us anything to talk about.
That's right. We have to have something to talk about. Maybe that's why we have all this volatility, is that we started the weekly livestock update several years ago.
I am not taking any responsibility or credit for any of that along the way. We're just here to talk about. I'm just here to bring you the news. That's my job. Scott, not a slow week for us this week. Not necessarily a slow week for us next week. What reports will we have next week to talk about?
We'll get cold storage, livestock slaughter, and finish next week with cattle on feed.
Sounds great. We will see you next Friday. Stay cool.
You do the same, Megan.
All right. So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there as well. And if you want to hear some more conversations about commodity markets and grain markets, make sure to tune into the weekly commodity market update with Scott's much younger brother, Ben Brown, and my counterpart, Will Robinson, that comes out on Tuesdays. Have a great weekend. I'm Meghan Grepner for Brownfield.